Okay. Shall we, very quickly, could everyone introduce themselves, because they probably can't see your name badges from here. We'll start right down the end with Werner. Can you introduce yourself, your bank, and can you score how your bank did, or your bank or financier, Dave, did in 2017 out of 10, please?
Okay. Hello, Werner Slavik. I'm head of aviation of Société Générale Equipment Finance. I'm in aviation business since 15 years. We have a portfolio of corporate jets, light aircraft and helicopters, doing business in Europe and USA and Brazil. 2017 was a good year. I would say we are dancing again, but only waltz. 10 years ago, it was jet and rock and roll. 5 years ago, we were playing chess. So it's quite good. And let's see if 18 will be better.
So what was the number? Number out of 10 for 2017?
7.
Okay, if everyone goes for 7, it's going to get boring. Don?
Okay, I'm Don Walsh with Stonebriar Commercial Finance. Stonebriar's large ticket, privately held equipment finance company based in Plano, Texas. We're across all asset types for aviation, commercial, and business. We're global. 2017 worked out very solid for us. Had some unique portfolio acquisition opportunities, so I'll say it was a 9.
Wow.
It was unique.
Hello, my name is Andreas Schild. I'm with UniCredit Leasing, heading the aviation financing team there. We do business aviation financing, helicopter financing out of Vienna and Munich. It was great, actually. 2017 was a very good year. I would say it was 6, so better than 5. Better than 5 is good. There is room for improvement, of course. We do see the market stabilizing in certain segments, so we're quite optimistic for the years to come. We are actually a commercial bank, a commercial background, so we're not a private bank. So this is why I think we have a bit of different approach. So this is why we are quite looking forward to 2018, and maybe next time we'll sit here, it's a 9 or 10. So let's hope.
That's the next question. Dave?
All right, I'm Dave Labrozzi. I'm the Chief Operating Officer at Global Jet Capital. All of you have heard Sean discuss the premise and foundations of our business, a panel before last, so I won't go into that. I would say we are in full growth mode. We are heavily supported by very stout private equity sponsors. We're looking to continue to grow the business very rapidly, but controllably. And on a scale of 1 to 10, I'm going to say last year was about a 9.5. We had a very good year. Looking to duplicate that and then some in 18.
Okay, Alex, you're not going to let him beat you, are you?
Alex Badran, Bank of America Leasing. I look after the corporate aircraft finance group for EMA and Asia Pacific. We are obviously closely allied to our US business, which I still understand is the market leader. I would answer the question differently. We hit plan last year, so the way I look at that, that's a 10. Others might think of it as less. And we start the year in good shape. So.
Marie-Laure Gassier from BNP Paribas. So we are doing business jet financing out of Switzerland, which is new for us. We've transferred the activity from Paris to Geneva 18 months ago, if I'm not wrong. So we have now a business jet and yacht financing platform dedicated to wealth management client, and we are serving, we have a global reach out of Switzerland, which means for us, Asia, Middle East, and Europe. We are not serving US clients. So, and I've been doing this business for almost 10 years. And last year, I don't know precisely, but I think 6 or 7 transactions, which is for us very good and compared to the size of our wealth management activities.
And your score out of 10 for the year?
Let's say 7.
7. And you moved partly because of flooding risk in Paris. That's right, isn't it? Biat?
Kaelin from UBS, one of the largest wealth manager, and as such, with a lot of ultra high net worth clients with interest in private aviation. We're running a multi-billion portfolio of aircraft loans and financial leases. We did very good last year. I rated at an 8.
Jim Simpson from First Republic Bank in San Francisco. I'm a senior managing director and run the group. We had a 10 last year. It would have been an 11, but we didn't have enough people to process the transactions. What we're finding right now, we love old airplanes. I love G4SPs. We're buying them for people. We're overhauling engines, gear refurbs, interiors, avionics, Wi-Fi, the whole bit. And for $7 to $8 million, you've got a great airplane for a high net worth individual that's going to fly 300 hours a year. It's good for 10 years. So the airplanes are finding us now. We've got 5 of those in process right now. We've got a couple Challengers the same way. So I'm very optimistic about what's going on.
Okay, so the whole conference has been, I think, the most optimistic we've ever had. So in that theme, Alex, what's your biggest worry at the moment? Because you're quite good at being grumpy.
Well, I'm not sure I'm worried about too many things business-wise. Getting up in the middle of the night for other reasons is an issue, but now I'm at that age. But probably in the bank at the moment, reputational risk. I think Ford mentioned a lot of the media, negative media. That causes a lot of consternation in senior leadership, questioning, are we in the right business, doing the right things? The higher sort of regulatory environment, due diligence, KYC aspects, those are probably the things that are our biggest challenges. Reputational risk, there's a few things going on around the world that would cause a lender to be concerned.
Andreas, what's worrying you at the moment?
So what is worrying us? I think it's not the best time to worry. I think it's now the time to capitalize on the opportunities that are out there. I think that's what's important now, because we can see that certain segments of the market are improving and stabilizing. We see that there's a lot of is going on with new aircraft types entering the market in 2018. There's a lot of stimulus to the market. And the decision by manufacturers to get new aircraft types to the market was heavily criticized a few years ago. But I think now it will pay off, because it's now the good general economic environment to get new aircraft to the market. And that will definitely help to stimulate the market, and it will help us as financiers to help our customers to finance this aircraft and to get them into the air. So not time to worry, but to capitalize on opportunities.
Dave, you've been through a few cycles. Are you relaxed at the moment?
We're not counting cycles here. It's actually pretty good at night, let me tell you, Al. It's not that I worry, it's what I don't know that I'd like to know. And as our name suggests, we really are global. We're not a bank. We don't affiliate and lend to high net worth. So we do business with companies and individuals around the world. And on the premise of what I don't know, it appears to be that there are times when customers aren't all they seem to be. And by that I mean it's not uncommon for a customer to own a company, but in some cases they are owning that company as a undefined trustee, if you will, for a friend or a family member. So sometimes it's hard to get beneath the veil and really understand who your customer is. The other thing that coincides with that is there are governments of the world that in many cases are focused on what I'll refer to as capital allocation and currency flight. And rules sometimes do change when you're invested in a long-term deal without an access to a banking relationship of some sort.
Is this something that the three people down this end worry about less? Because as private bankers, you have access to a huge amount of data, don't you?
I may, this is also not something that worries us, but that is of big concern to us as well, because there is a significant amount of business we do for prospects who are being onboarded through the aircraft financing, and there, of course, we face exactly what Alex and Dave had just mentioned. And with respect to the long-term aspect, I mean, Chris mentioned today the new sanctions list. We're in a long-term relationship, 5, 7, maybe 8 years, and who knows what will be in 5 years if an individual, if public perception has changed. Maybe there will be new papers being published, creating new focus, and then suddenly you have got people you are absolutely comfortable with now that you'll find on a sanctions list.
Can we have a show of hands? Who thinks the market's getting more competitive from other financiers? Who's more competitive?
Financing market?
Yeah.
Globally?
Yeah.
If you count the U.S., I think
I'm
so.
not counting the US. Let's do non-US.
Not counting the U.S.
Who thinks it's getting more competitive? That's interesting, isn't it? Does anyone want to comment on that? Because you're all having a great year. We haven't really seen any... you can argue whether Global Jet Capital is a new entrant because you took over from GE. We've seen CIT exit. Do we expect... Are you guys worried that you're going to have new competitors outside the US? Any of you?
I'm happy to give my view. Clearly, would consider on the private banking deals, it has gotten more competitive. Rates tend to go down, and just because there are very relatively few deals that are actually being financed, and with us here being in the room chasing those deals.
Don, because you compared the international market to the US, it's very different, isn't it?
Yeah, I think in the U.S., the supply and demand of credit is pretty well covered. There might maybe even more supply than demand. I think globally, there's a big difference from what that side of the panel offers versus what this side of the panel offers, and there probably is room for players in the gaps, and generally, the more robust the finance capability, the better for the market. So, yeah.
Marie-Laure, you were going to say.
I think, as we said before, I'm not sure market is getting more competitive. I think there are deals for everybody. Some of us are doing operating leases, as we mentioned before, and as a private banker, we don't do that, so we don't touch these clients. We are not interested. The US market is very specific. Some banks here are looking specifically at the US market. We are not there. We are looking for private clients, and even for private clients with a private banking perspective, some of us are active in some geographical areas, and they are very strong because they have a local presence. We are not all of us at the same places, so I think there is room for everybody. This being said, when there is a very good and very high-profile private clients, I mean, we are not the only one to make an offer, and for these very good clients, that shows that rates are getting down, and in a very significant way, I would say. So, I mean, we are pricing deals cheaper than last year for good clients.
Dave?
Yeah, just to jump in there on 2 points, if I could. One is I think from my company's perspective, we're fairly niche-y. And it's not, I mean, I see these people up here all over the market and covering, but we're after a different type of customer. So we're in a little different area. The other thing, too, I've just got to kind of set out here is your comment about, are we really new, or are we just a continuation of the GE world? I got to hit that one. We are nothing like the old GE world. And having, experience on both sides of this thing, we're completely driven differently in how we go to market, what we do.
I was just waking you up.
Thank you.
I think in Europe there's more competition, there's a lot of cash, and but I hope on a long-term view that we are not all together. We are not doing maybe the strange things we did in the past, because for the whole industry, it's quite important that we provide attractive financing, but we should not leverage too much and to over-optimize. There are new entries, there's a lot of cash, but there's still business for all of us. And of course we have to improve. It's the challenge, a daily challenge, but I think it's quite important to have a conservative view on it. Not to be too optimistic and not to get greedy maybe, so to gain too much business.
Because there's a great question from someone in the audience, and it was one I was sort of going to go through, which is, everyone's very optimistic now, but you guys don't seem to be quite as optimistic as you were in 2007. Jim?
Well, I can say this. I mean, so I work only in the U.S. markets with very high net worth people on typically big airplanes. And some of the things that concern me is I'm starting to see some signs that it's getting a little too good to be true. I'm seeing margin lines of credit being used to buy airplanes. I'm seeing stock secured loans used to buy airplanes. And I lived through that in 2007 and 2008 where I had to go collect. Because as the portfolios dropped, well, there was a collateral call. And people didn't have it. And people said, well, let's just flip it to a conventional aircraft financing. Can't do it. So it's getting a little heady out there as far as the liquidity, the stock market. My business, I think, is almost a direct one-to-one correlation with the U.S. equity markets. When equities are great, people are spending money, the party is huge. When the markets take a big correction, if a 20% correction at this point won't kill it, but it will certainly slow it down and cause people to pause. If we get a 50% correction, I think we're sort of dead for a year, and we'll just go strictly into portfolio management and make sure our assets are being taken care of and maintained. And we'll probably have a couple people have to fire sale the airplanes. So.
Alex, any thought?
Optimistic, I am, but I don't like to say that out too loudly because those who know me know that I'm a bit of a sandbagger. If you're too optimistic, the budget goes up. It means you have to run faster to make the same kind of money. No, look, I think we're in a good place. Chad and Brian in particular, those two guys have lifted my optimism a little bit. We've seen improvement over the last 12, 18 months in inquiries. We're turning more of those inquiries into backlog or into closed transactions. So we're in a good place, but I don't want to shout it too loud in case that gets back to base.
Andreas?
I think the question is great because the question is, can this happen again? Yeah, and I think that there is experience that the whole industry made, and I hope that we all learned from what has happened in 2007, 2008. And I'm quite optimistic here. I have a warning example that I pinned on the wall of our office, and that was a value forecast from 2007, the 10 years forecast. Just imagine the graph. It was like this horizontal all over, with a slight improvement after 10 years. And I think that's our warning example. I think no, it cannot happen again because we have a reasonable view on the market. We know that market values are volatile, and we know that when doing and providing financing to the industry and to our clients, we need to find a balance between the customer and the asset and try to put a reasonable financing structure together for a reasonable lease term. And I think that's one of the learnings that we have. Yeah.
So this is not my saying, but it's a great one. So, you know, we've had quite a party in the last 8 years on this economic recovery, and I think the last 2 years have been really great. But I will say to everybody that, you know, the size of the hangover is commensurate with the size of the party. And we tested that theory in 2007, and it was true. And in the domestic U.S. markets, it's getting very competitive. Terms and conditions are getting a little loose. Costs are going up. And I say that because the pilot shortage, I mean, the $400,000 G650 captain is probably going to happen this year. We have a lot of new owners jumping in. We have a lot of aircraft managers looking for pilots. And then you look at residual valuations. So I have a client who's got a global. He finally wants to sell it. And we did a calculation. When he sells that, it's going to cost him $20,000 an hour over the life of ownership to fly that airplane. Between the operating costs, the maintenance costs, everything all in, the management costs, and the loss of residual. And when you say $20,000 an hour, I mean, a lot of wealthy people, that still means a lot. So that's the type of stuff that concerns me. And then we see in the U.S. markets, you can charter an airplane, like a Challenger, for about $2,000 an hour cheaper than you can own it. So we see a lot of people getting out of owning airplanes at this point, saying, I'm just going to charter. Now, a charter's a different deal. You can't leave your stuff on the airplane. You don't know the crew often, and all those good things. But I do see some signs of stress in this marketplace.
Okay, another question. I think this is great because you can compete on this. What's the typical time frame from origination to closing? Be it.
Maybe you should first define what is origination. So when I say from when the terms are agreed, term sheet signed.
Yeah, let's go from term sheet.
Term sheet signed, then it's typically 3 to 4 weeks. It necessitates that the client is very reactive. We have done it below 2 weeks. We have had cases where it took 6 months. It is mainly with our client.
Okay, so you've now set yourself up. Who wants to beat UBS's time?
I think it depends on the client to a large extent. We are able to do it quickly if the client wants to and if the delivery is around the corner. But sometimes the client signs the term sheet 3 or 4 or 5 months before delivery, so there is no hurry. So we really need to follow what client wants. And sometimes the client is not reactive because he has no lawyer with him. So if he's not educated and he's not able to provide the documents that we need, it may also increase the time frame. But if the client has an advisor, it can be quick.
Yeah, that's a fair point, actually, that you do get a client who's not.
I think it's very important to guide the client through the KYC process. We all have to do with KYC. And it's very important not to leave the client alone with this process. So this is very, very important, and this can improve and reduce the time frame from origination to closing.
For us, if we bring a new client in the bank, it's 6 to 8 weeks from the time we have all the correct information. And we've tested that 32 times in the last 2 years, and that's about the right number. For existing client in the bank, we can move much quicker. It's all about the KYC, having the financial information, and doing the analysis work. The other part of this now is we have a new client coming in the bank, buying an airplane. Pre-buys are not, you just don't take a plane into a pre-buy now. And Brian, you probably know more about this. I mean, you go to schedule a pre-buy somewhere on a previously owned airplane, you may have to wait for a month before you can get the plane in. And then the plane's in for 12 to 18 days, and then there's the arm wrestle about who's going to pay for what to fix what, and then there's going to be some modifications like ADSB, and then we find the clients go, well, while we're at it, why don't we do the paint job and the interior work? And, you know, we've seen it go from 6 months, so they can take a while.
Okay, another nice question from just coming up now. What segment size attracts you the most, and which ones will you not touch at all? Does Dave, you're looking like you...
Could you repeat that, please? I didn't catch it.
I'm just showing it now, sorry. I think. So what segment size attracts you the most, and which ones, what won't you touch with a barge pole?
Well, there's a lot of little frogs in that one, aren't there? We are really focused on what I'll say is super mid-size and up. Not that we won't do smaller airplanes, we will. I mean, we're all about trying to grow our customer base, and relative to that, our net earning asset level. So it's, you know, it's a loaded question in a lot of respects. You know, the panel before us talked about aircraft age, and I expect we'll get into that at some point. But it's really super mid-size and up, newer than older, like everyone else up here, right? But so many times it's not about the airplane. It's about the customer and what they intend to do with it, and what their ownership history has been, and what the plans look like. In a lot of ways, we use the airplane as a customer acquisition model for both future opportunities and net income growth.
Werner?
We like to do light, mid-size, and large jets. So brand new, young, used one. So we do a lot of light and mid-size, and we are not touching the vintage jets, like out of production aircraft, which are quite old. And of course, it depends also on the maintenance condition. So you can't say it's 3 years or 5 years or 7 years. It depends if the aircraft is enrolled in programs. So, but there's a lot of business in this segment from the main OEMs, and so we see also here some appetite in the European market, especially.
Yeah, Slido put me on a sanctions list. Obviously, it's not going through. Which one of you can comfortably finance a client today without worrying that at one point in the future they may come under the U.S. sanctions? Anyone?
I think I can say with a 90% confidence the clients that we have are all U.S. residents, maintain their assets in the U.S., have most of their business in the U.S., and their airplanes are registered. So 90%.
Well, let me take that one, because I don't know how to really enter a customer relationship thinking of what may change down the road. I mean, I can tell you, we're going to look at someone's business model, where their assets are, what they do for a living, look at the whole history, right? And if they're in an industry, or they're in a part of the world that has some sporty stuff going on, we're going to evaluate that as part of the transaction. You know, part of my job, besides growing the business and customer acquisition model, is, and some of you have heard me say this before, I tend to walk along this blue sky, green field, and I'm looking for lightning bolts. And that's kind of the consideration we take when we look at a new customer. There's a lot in the mix there, but to say we're not going to do a deal in, pick a place, Asia somewhere, because one day they may be on a list of some sort, it's really hard to gauge the future. It's how we deal with that when it happens.
Okay, next question.
Can I just add to that?
Yeah.
Look, I mean, it's really simple. Our documentation provides for that event. If there is a breach further down the road, there's a mandatory prepayment. I mean, you just get to that. I just haven't seen it happen. And our clients obviously understand when they're doing business with us that they have to subscribe to those sanctions or potential use of the aircraft where it's flown. And they have to mandate to us that they don't do that. And if we find out that they do or they do, that's the end of that transaction.
Okay, hands up. Has anyone got the appetite for fleet operators? Okay, I can see why the private banks do that. Werner, why won't you do a fleet operator? Werner, why would you not finance a fleet operator?
So I think as we focus on corporate recourse, so I don't see so many opportunities financing some additional aircraft for aircraft operators. I think, as we know, the charter market is doing well, depending on the segment, but in general, I'm talking about Europe, as we had in the past, the situation that operators guaranteed flight hours, and we had some main bases where there were maybe 2, 3, or 4 times more guaranteed flight hours than the demand. And I think this is one of the main reasons so that that the lessors and the banks are still very cautious about that. And but we have to spread. Maybe there's an operator who has a long-term client in the back, and he's acquiring the aircraft, and this client, corporate, is providing a guarantee. So then you can consider it. But just for third-party charter, I think the market is not ready again, and this is the main reason why a lot of lessors are not doing that. Yeah.
I think within a private bank we have really an approach which is relationship-driven. We don't do pure asset-based financing. So in this perspective, we cannot finance a fleet because and when we do a transaction, we do our due diligence on the client and we ask for a personal guarantee. In this perspective, we are not interested in financing a fleet because a fleet is a pure asset-based financing, so it's clearly outside of the private banking scope. Sometimes we have some tricky situation where we have a private banking client willing to start a business. But in this case, usually they don't want to provide any personal guarantee. They are looking for pure asset-based financing. So we are back to square one, and this is outside the wealth management business.
Okay, new question. Andreas, what's preventing you from underwriting? What's the one thing preventing you from underwriting more deals?
Nothing, full stop. So get me the deals, and there's nothing that prevents us from underwriting more deals. As to the question before, I should have raised my hand. Who would go for fleet operator?
You would?
Yeah.
Okay.
But nothing is preventing us from underwriting more deals. I think that this is not the main issue. Yeah.
Well, I think we have the capacity, we have the balance sheet, we are happy to do more deals. The only thing is we need to find the right clients.
Alex?
Nothing really. Just finding the right clients that fit our credit window. If they're there, we'll underwrite them if we win them.
Dave?
What we're really doing is controlled growth of the business. We have capacity to lend and lease more. We have plenty of resources, but we're being very prudent on how we grow the capital allocation of the model. So it's really self-limited. Nothing external is keeping us from growing.
Okay, another Don. We've got Stonebriar has tapped the capital markets a few times. We've got a question about, we've got several views about capital markets. Are you confident that you can do it this year?
Yeah, Stonebriar's raised over $1 billion in third-party capital markets. It's part of our plan, and we'll continue to do so. Yeah.
Dave, did you want to comment?
The world's going to see us very soon in the capital markets to do an ABS. And again, that'll be right in the near future here. And it will be significant.
Great. Question from a lawyer. Is Cape Town helpful, or is the TV show Repo Jets a better reflection of what happens? Be it. Oh, no.
I think we've never seen, or at least I don't know, any transaction where repossession has relied only on the Cape Town registration. So from this perspective, this is not the key aspects on which we are going to do the transaction. But this is very important, clearly.
But you have had deals that have relied upon someone getting disguised, sneaking into an airport, boarding a plane and flying it out. Is that what you're saying? Who takes comfort from the Cape Town Convention? Anyone want to stand up and...
I think in general, all of us are taking comfort from Cape Town, and it has become the standard without which it will not fly anymore. yet remains to be tested whether it will hold what it promises. That is all.
For us, it's a small component, the quality of our clients, the documentation we have. It's not really a big consideration. We don't expect any of our aircraft to be repossessed.
Okay, very quick comment. Who would like to comment on post-closing financing?
So at First Republic, we spend a lot of time on portfolio management, asset, looking at the assets. Once a year, we do a new valuation on the assets. We have something called a data collection sheet that's shipped out to the head of maintenance. We go through the airplane very carefully. We have one of our appraisers write a report on the airplane, a desktop based on data collection sheet data. We keep access to the aircraft maintenance records, so we have MyCMP for all our Gulfstream aircraft. We have CAMP, where we have our own unique IDs and passwords, where we can go on and look and see what's going on with the airplanes. So it's a big part of it. In our case, we just don't do a term loan and stick it in the filing cabinet and see it. We're monitoring all the time. Once a year, we communicate with the owners, if we're going to do it more frequently, about where the loan is, loan value, or loan to value, and where the aircraft is in value. So there's no surprises. We don't have any owners that say after 5 years or 7 years, God, I wish I had known. Well, we tell you every year, and we follow it up with a phone call or a visit. And on the 56 planes we have in the portfolio, I bet you I see half of them every year personally. And talk to the pilots, and talk to the head of maintenance, and walk around them, and go into landing gear wells, and look for hydraulic fluid leaks. And they all sort of go, wow. And then if we have a problem, we call the owner and say, by the way, here's what we found. And most of the owners are very appreciative of that.
Okay, any questions from the room? We've had hundreds on Slido. Very quickly then, going down, Jim, we'll start with you. What's your score going to be for 2018?
I'm optimistic. I mean, things could change. The geopolitical world can change things in an instant. The stock market, if it changes, I'm hearing we're going to see greater volatility this year in the U.S. equity markets. You know, that's a little concerning at times, but I think this year is going to be a good year.
Score out of 10 for this year?
I hope we have a 10 or 11 this year if we can get the right people to help work
Okay.
with us to process them.
You've obviously been watching Spinal Tap. Pia?
At least an 8.
He's setting a standard time.
Or better than last year. So January started well. We expect, particularly in Asia, the business to be very good.
Mark?
I'm pretty optimistic. I think there is no reason for having a year which is not at least as good as 2017. There will be new models on the market, the Global 7000, the G500, G600, the A320 Neo, all are very good aircraft. The market is picking up, so I think the prices should be resilient, and this is a good timing.
The sandbagger, again, we have a strong backlog for this year, so in the context of we will hit plan, I have no doubt it'll be a 10. I think the test for us is with the opportunities that have come in this year, perhaps more opportunities to monetize assets as the markets change and interest rates change and currency rates change. The test for me will be what's our backlog at the end of the year. So if it's similar to this, it'd be a 9 or 10.
So you're just worried about your...
We're pretty steady, really.
You're just worried about your target going up, basically.
I do.
The world is in a fundamentally different place than it was 10, 11, 12 years ago. And we may, in fact, have some type of capital market or stock market adjustments that none of us see coming. But let's not forget, all the major world markets are in ascension. Manufacturers have cut production dramatically. Speculation in airframe skylines is gone. The world is flying again. There's new business models. There's millennials who like to fly. I mean, we're in a really, really good place here. So I'm very much encouraged by everything that we see.
Okay, what I'm going to say to the last three is that was a lovely ending to the conference, so let's not ruin it. Andreas?
I'm very optimistic too. For 2018, I think we should set reasonable, achievable targets. I would say 9 or 10. Yeah.
Yeah, I would agree. I think after some false starts, it really does seem like the industry is rebounding, knock on wood. So yeah, I'll say, predict a solid 9 again for us this year.
It's 9 out of 10, and we continue to dance waltz, not rock and roll.
And I think this is by far the most optimistic and cheeriest bank panel we've had